Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Is silver no longer a safe haven? Is silver worthless? Has it lost its luster in the economy for these industrial uses? The answer is no, definitely not. See, silver is used more as an asset while gold is used more of a commodity. Gold is used more for jewelry, more for necklaces, earrings, coinage, bars. So a lot of gold is recycled. Silver, on the other hand, is used for dental alloys, space equipment, photography, mirrors, laptops, cell phones, 5G technology, electric vehicles. Silver is the most highly conductive metal for thermal conductivity and electricity, and we're finding more and more uses for silver every single day. So the point of this article, though, is from a safe haven perspective. Since gold is king, gold is looked at more of a safe haven alternative, whereas silver is used more for the industrial applications, which could hurt silver since industries right now are hurting. So anyways, the link to this article from Money Control will be in the description. So, in the last couple of weeks, silver prices have recovered by almost 20% after seeing poor performance in March. The price of silver in March hit their lowest since 2009, directly from COVID-19. It closed 15% lower as compared to February amidst a lot of volatility, casting a shadow over the metal's ability to act as a safe haven. If we look at silver's price chart for March, the metal traded around $16 per troy ounce at the beginning of the month. The prices were in the positive in the first week of March. However, a sudden downfall in the middle of the month pushed rates down to $11.60. And this was from the feds pumping in money. This was COVID-19 spreading worse, the fear, that we're quarantined till May 1st, so on and so forth. So on March 18th, silver was at its lowest since April 2009. The prices traded sideways for the remainder of the month. At the end of March, silver was down 15% month on month. Silver's dismissal performance in March can be attributed to the coronavirus-driven lockdown, as it is an industrial metal, which I already explained previously. Its worthiness as a safe haven has hit due to this. On the other hand, gold has performed better, proving its metal as the safest of investments. Right? Gold can be a great way to store during economic turmoil when people aren't at ease, but the potential for silver to rise, though, is a lot higher than gold. But right now, people do see gold as that safety net for them. In April, the supply of silver will take a hit, as Mexico, which is responsible for about 23% of the world's silver production, will likely keep its mines shut down due to COVID-19. The reduction in the supply of the metal will somewhat be proportionate to the fall in demand. However, what remains to be seen is whether a dip in the supply would lead to a rise in prices, which could be interesting, right? We know that when there's a low supply and there's a high demand, that's going to shoot the price up, and that's exactly what we're seeing with silver specifically. Definitely silver shortages around the globe. Mexico and Peru make up 40% of the global silver production, and they're shut down due to COVID-19. So what is it going to look like as this growing demand for silver keeps rising, but the supply cannot be met? Perhaps silver has already seen the worst in March, and many investors get optimistic and see a silver lining there. Is that the bottom? Are we going to start seeing higher silver prices? That's what people are speculating. In the next 3 to 6 months, silver is looking extremely bullish. On the technical side, silver is stuck in a fairly tight trading range, and we can see indecisiveness in the market. The silver prices rose to $15.90 on March 13th, which was its highest for the month, then suddenly dipped to $11.60 on March 18th. RSI suggested that the metal was oversold, and the MACD gave a buy signal about a week ago. The metal rose again within the next few trading sessions and made a high of $14.70 on March 25th. We feel $13.50 silver would be ideal support for silver in recent conditions. So it can't go below that, right? Support levels are what it can't go below. Resistance levels are what the top is trying to break through. Silver futures in the previous week pulled back slightly above $15 at that point in time. Markets showed a significant buying pressure. On the basis of these choppy movements in silver, we feel that prices could touch $16.50. But there would be a massive selling pressure with a tight resistance around $17.50. So if silver does break through this $17.50 range, we easily could see much higher prices. I just made a video talking about $26 silver and what that would look like. If gold reaches in their target signal for, because these are artificial intelligences like the VCPMI from Seeking Alpha. This one was the Fibonacci trading bot from the other article, but they're AI, so there's no emotional attachment. It can't make biased decisions because it looks at everything systematically, right? The data is systematically programmed inside, so they can't make human-like errors. It looks at everything and just it looks at it for as it is, the reality of it, which is a lot more accurate than people that have emotional attachment investing. And it was showing that the target for gold is $3,750. And if the gold to silver ratio is to be around 20 to 1, that would mean that silver would be $200, which is extremely, extremely high. But is it really that high? Is it really that crazy? I don't think so. If you talk about crazy prices, well, ladies and gentlemen, we're living in crazy times. So the chance of that is definitely much more plausible than if nothing was happening in the economy. In our view, the ideal way to trade in this commodity is to simply look for pullbacks. It will give plenty of opportunity to buy at a cheaper value for longer term. And that's the thing as well. A lot of people, they say, oh, silver's low right now, and that's bad, but that's actually great. That means you can buy more silver for cheap, lowering your dollar per ounce average of your overall stack, and then you can profit or capitalize on profits more in the future after it rises. Because guess what? Markets go down and markets go up, and markets go down again and markets will go up again. That's how the markets work. That's how they always work. That's how they're programmed to work. That's how they're going to work. So until you realize that, you're always going to be looking for something that's not there. The markets always go up and down. It's actually healthy. You don't want a market to just keep going up, 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 because that's a huge red flag. That's a huge signal that there's going to be a huge crash, 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 crash. So you want there to be some ups, but you also want there to be some pullbacks, and that's opportunity to buy. It's a buying opportunity. Right now it's kind of harder because there's the high premiums on all these sites. You know, you might be paying a $15, $16 premium just for an American Eagle. So that might not be the best or smartest or wisest decision, but there is opportunity out there. A lot of places like Bullion, instead of 15-day waiting periods, it's only 5 days, and there's no $400 order minimum anymore. Usually, if you at least spend $100 so you can get the free shipping. So, however, a word of caution would be to keep the leverage low, as investors may get hurt by the volatility that the market is witnessing. And that's because silver is more volatile than gold. Silver hits higher highs and lower lows. It goes to more extremes, which can be good, because that means you can make a lot more money into it, but also can be bad because that means you can lose a lot more money. You know, wherever there's a lot of risk, there's a lot of reward, and it just depends on which side of the fence you are, if you're willing to play the cards right, or if you're willing to take your chance. And I definitely think silver is one of the smarter risk slash reward ratios, since silver is money within itself. So even if that coin doesn't do well or doesn't perform the way you like, at least you still have that ounce of silver that you enjoy at the end of the day. So just to recap a little bit, silver definitely has potential, but gold is seen more as the safe haven, more of a store of wealth. Gold does have a couple benefits. You can store a large amount of money of gold in a short area. You can fit $100,000 of gold in a shoebox. You can't do that with silver, so the convenience of gold is there. So that's why diversification also can help out a lot too. Diversifying, your assets, diversifying your portfolio, because that will protect you from silver and gold and spot price, and even, if worst comes to worst, if there was a bartering situation or SHTF happened, at least you would have stuff to barter with. So it's all looking good as long as you diversify. So anyways, I'm going to wrap this video up here. The link to this article from Money Control will be in the description. I hope you enjoyed this video. If you did, make sure to smash the like button. Thanks for tuning in, especially if you're watching this late in the video. Thank you for not exiting out. Thank you for listening to everything I had to say. I truly appreciate it. Check out the 2 other videos I posted today as well. You don't want to miss those. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.